Hey guys, Keel Stokes here. Welcome back to another Trading Edge video, your weekly look around the markets. Just spent the last 5 hours shooting people in paintball. Then I rushed home so I can shoot you some of the best trading ideas that are on my radar for the week to come. Now, before we hop into that video, I want to talk a little bit about growth and goal setting. And this was inspired by a podcast that I released this Friday called 7 Steps to Becoming and Remaining Successful. And that podcast was inspired by a post from my trading partner and my good friend Jason Greystone. We talked about 7 signs that you're really growing. And the first 3 of those 7 signs were this: you've changed a lot from a year ago, you've been through rough times or hard times, and you're serious about your goals. And I want to talk about number 1, you've changed a lot from a year ago, because I get a lot of new people to this channel each and every week, and thank you for checking it out. Make sure you subscribe. I'm trying to hit 50,000 subscribers. I also have a lot of traders that have been following me since 10 years ago when I started this video. And when I talk to them, I get a lot of different responses. I get the newer traders kind of saying, hey, Akil, you kind of do the same thing each and every week. You analyze the charts the same way. You look for the same setups. It's kind of boring. And then you get the older traders that actually say, hey, Akil, man, you've changed so much in your style of trading since I first started watching you. And the question is, well, how can it be both at the same time? How can I change massively but seem like I haven't changed at all? And it's all about the power of 1% change. You see, I believe in the Kaizen philosophy. It's something that I adopted really early on in my trading career, and something that I follow today as a business owner, as a trader, as a husband, as a family man, basically in everything I do. And the Kaizen philosophy basically is a philosophy that says, hey, the goal is continuous improvement. So if you can become 1% more efficient or 1% more productive, 1% better each and every day, it's a slow path, but it's a steady one, and bigger picture, you're going to be, where you want to be, where those bigger goals are at. And I always like this in comparison to the 1% change thing, because 1% change, even in account sizes, for you guys that are familiar with compounding and stuff like that, but a 1% change really doesn't seem like much in the beginning, right? I always say, hey, look at the wall, stand where you're at, right? Walk back 10 steps from the wall and see where you end up at, right? And kind of put a little marker there. Then go back to that same wall and just adjust yourself 1 degree to the left, walk out 10 more steps and see where you're at, right? You're going to be at a slightly different location than the first time, right? But remember, that's only 10 steps, right? If you were to do that for 20 steps, for 100 steps, for 1,000 steps, for however many steps you can do in years and years and years, all of a sudden that little degree of separation is a massive degree in separation. And that's why traders that have been following this video since 2009 or wherever, right, you see kind of a massive difference in how I've changed my trading style, but really because it's small incremental changes over years and years and years, kind of that growth mindset of always learning, always developing. But something else that those small changes mean is that I'm not system hopping. I'm not jumping from one shiny thing to another shiny thing, trying to figure out, what's the get rich quick path. I am just becoming a little bit more efficient in what I'm already doing. I'm going back and finding kind of new ways to approach the same task and just slowly becoming more productive. I think that's very important. And that was a goal of mine years back. It's still a goal of mine now. And if you're someone that doesn't have goals, whether it's trading, whether it's in life, whether it's in your business, it's going to be very, very hard for you to be productive, right? Goals are going to be your destination, right? If you're traveling somewhere, right? Goals are the address that you put on the GPS and it shows you the route to get there. If you don't have goals, if you don't have a destination, where are you really going? And so many traders are like that. So many traders are watching this video or watching another video or reading this book, but there's no real plan on how to achieve what they want to achieve. That's even if they know what they want to achieve. So if you're someone that needs help with that, if you feel like you're stuck or you don't know what to do, or you don't know how to set those goals or which path to take to achieve those goals, here's what I want you to do, right? Next week, starting November 15th, we have a 4-day free online trading workshop. It is 100% free. It is 100% online. If you can make it live, that's great. If you can't make it live, register anyway. That way you get the recordings. That workshop is really going to unlock a lot of the myths that you may have heard or fell victim to about trading. It is also going to set your straight path and show you exactly what to do if you want to be successful. Now, it's not going to do it for you, right? Sorry, we can't do that much. We're not going to, trade for you, but if you involve yourself in the workshop, if you pay attention, if you take notes, if you ask questions, you're going to leave after that 4-day event with a direct path on, hey, this is what I need to do if I want to get good. How do I know this? Because we've done this workshop many times in the past. We work with traders on a regular basis, and the ones that commit to that level are the ones that ultimately become successful. And seeing how this is the end of the year, essentially, there's no better time to get started and kind of jumpstart 2021. So I'll put a link below. Make sure you register. Now it's time to hop into our video or our trades, I guess, but wouldn't be a video if I didn't say, hey, hit that like button, subscribe if you're new, help me reach 50,000 subscribers, and I hope you guys enjoy. All right, so we're going to kick off this video in the same place we kicked off the last video, or I guess the last two videos, the trading edge and the midweek markup, and that is looking at the pound dollar. Now, last week's pound dollar prediction played out to perfection. You can see the head and shoulders over here at the left. You can see the move right back up to that 136 even handle, which was dead on with our VS1 level looking left. And if you watch the midweek market video, if you go back and watch the midweek market video, it's actually going to show you a sneaky way to get involved down here using a range bar chart. Now, a lot has happened since, but we have a very similar setup setting up once again. Now, we have broken close below a previous level of structure. You're going to see this on the daily chart as well. And typically a break and close below means that we're predicting a move lower. We follow a 4-step process here at Tier 1 Trading called IPDE, identify, predict, decide, execute. We identify what the market has done. That allows us to make a prediction on what we think the market is likely to do next. Then we decide how we want to get involved and at the end, execute the trade. Now, although we can identify a break and close below these VS1 levels, the VS1s are the red and green boxes on your screen. They're a visual indicator that we use to give us a visual look at support and resistance. Although we've broken and closed below it, there's really not much room to travel to the downside. You see there's no real significant level of structure to travel to next. Maybe you can say 133.55, but we've essentially already come into this rejection zone. So I would have no interest in any type of continued shorts. So what's on my radar again is going to be another reversal. And as we pop back down to the 60, you can see we have something very similar setting up. Now, this was our notes from Thursday's live room where we kind of had a halfway head and shoulders. We thought we might get it. We didn't quite get it there, but this is why all we have to do is really adjust our analysis. And you can see that price action has pushed down. We rounded out. Live rumors, you're going to love this. I don't trade this, but for some reason we've been talking about it a lot. This is actually going to be a cup and handle. I apologize. I don't have a tool here on Ninja that allows me to draw kind of like a loop-de-loop line. I guess I probably do. I never used it. I don't trade cup and handles, but somewhere on here, time cycles. I don't know. It doesn't matter. Just imagine this being kind of like a bowl-shaped deal, right? A bowl-shaped deal here, a little flag pattern at the end of it, and then the breakup for the cup and handle. Now, again, that's irrelevant for me, but thought I'd point it out because that's kind of been a running theme here in the live room. But what we're looking for here, what I'm looking for here this weekend is another head and shoulders type of pattern where, again, whether it's a head and shoulders or not, it doesn't really matter. What matters is that we want to identify the key level of structure resistance, which is that yellow line I just drew in. I love the fact that we ended the week with a tight consolidation at the upper range. That's a very valuable sign for me as for a potential bullish breakout. And once again, just like last week, if we can violate this level, I would expect a move higher. So good proof of, we always talk about the market doesn't really do too many things. It kind of does the same thing, just in different ways. And this is a perfect example, just like when we see back-to-back advanced pattern formations of where you can have back-to-back classic reversal patterns as well. So pound dollar on the radar once again. Pair is going to be the dollar yen. This is a pair that burnt me during the week. I had a very good setup on here. I had an advanced pattern formation take as a trend continuation opportunity as well, right? George, you're with me on this. You shared it on Instagram. I reshared it, and now we both look like fools. But that's trading. If you're not comfortable looking like a fool, if you're someone that's going to put your trading ideas out there, you're in the wrong sport or you're in the wrong game, right? Because you got to put your ego aside and just be robotic in your approach, and know that we're playing a game of probability, not a game of I know better than someone else and I have to be right all the time. But we're looking for a trend continuation move here because same thing as before, we had a lower low, lower close. We identified a lower low, lower close. We predicted that price would likely to continue lower. Now, a day after we got that lower low, lower close, you can see that we got a pretty significant bullish candle, right? When this happens, this is going to be a false breakout for me, which no longer has me identifying lower low, lower close, no longer has me predicting a continuation lower. So for me, this isn't going to be a trading opportunity, or this is no longer going to be a trend continuation trading opportunity. But I bring this up because it still may be one for you. And if it is, here's what has happened, right? We've retraced back into really the last upper range of this consolidation. And if we go down to a 240, a 4-hour time frame, right, you're going to see we're starting to consolidate in our own right. We came up here, we lost some momentum, we retraced down, we pushed up a little bit, we retraced down, we retested these previous lows and held so far, which means this level is going to be of significance. And if we can violate this level to the downside, this level meaning the purple line I drew out, I would expect a move back down, to maybe 1330s or all the way to the lows here around 13 flat, 112.70. So the key level to look for here on the dollar yen for a bearish reversal pattern is a violation of this level and then a move lower again, 1330s, maybe 1350s, being kind of a conservative level, and then the lower VS1 level down here for a more aggressive one. Real quick, just want to pop in and see what the 60 looks like. I didn't look at this today. Yeah, same situation on the 60, just probably a little bit more clarity. Yeah, 1330s, look at that, right? And this little mesh point is going to be a good level. Previous structure support, support broken, support turned into resistance right here. My eyeballs have that as a 618. Let's see how good my eyeballs are. Whenever I say that, I jinx myself and I look like a fool in front of you guys. Please don't look like a fool. If I do, I'll edit it out. Yeah, look at that. 618 Fibonacci retracement. Bang, right there. Decent level to look for profits. Head over to the Aussie Canada. This is going to be a simple one, just an advanced pattern formation forming for you. And we always talk about looking for advanced patterns in areas of consolidation. If you've ever been around the Aussie Canada, this is as far as directional movement goes, this is a horrible pair. You have a nice little streak right here, obviously, but typically this pair tends to consolidate. We go up and down and up and down and up and down. It's also been a really good pair for advanced pattern formations. The frequency isn't that great. It goes through years where it's banging them out, and then I think last year was a really slumpy year for this, but in general it's a pretty decent pair, at least for me, when it comes to pattern trading. And speaking of patterns, we have another one setting up, right? We had one right here, boop, 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 that didn't turn out to be a winner. At least I don't think so. Let me see. I don't believe it was, because I remember taking it. Yeah, we came close, and then don't get me started on that. But we have another one setting up as well, which is going to be a potential bearish bat pattern. And we have a few parts of that pattern completing. And before we get into the pattern, right, I think we talked about 1% change and kind of small goals and people jumping from system to system or maybe learning too fast. And we're going to address this in the workshop next week as well. But learning to trade is like kind of like growing up as a kid, right? You can't just run, right? And running is like the strategy. You can't just jump into a strategy and expect to be successful, especially if you don't know everything that goes into the strategy and everything that goes into making the strategy work the way you want it to work. It's really got to be a crawl, a stumble, a walk, a trot, and then a run type of deal. And with pattern identification in general, advanced pattern identification in general, many people want to hop straight to understanding the pattern. What are the ratios? What are this? What are that? But they skip over what matters most in the market, and that is understanding how to read the price chart. That is understanding kind of the ebbs and the flows that happen like this. And while these ebbs and flows may seem pointless to many, when you come back to them years in your journey, you're going to see that they're actually the spine, the foundation of everything that you do in trading, whether you're a trend trader, consolidation trader, a pattern trader, even an indicator trader, right? They're so important. And in this specific case with advanced pattern formations, having the ability to identify these legs are important because these are going to be your starting points for your pattern, right? This swing high right here is going to be your X, to this swing low is going to be your X to A. If you can't identify the starting point of a pattern successfully and consistently, you're going to be all over the place and you're most likely going to fail. So make sure you spend time on that stuff and not just rushing to whatever may seem like the moneymaker. But that's going to be our X to A. Our A to B is going to be right here. Our B to C right down here. You can see we have a bat pattern on the radar. If price action were to head up to our 886, we're going to have a bat pattern completion at 92.35. And of course, the zone is going to be from 92.35 all the way to the X leg here. So good old potential advanced pattern formation here on the Aussie Canada. Typically, bats give me a good risk reward. There you go. You can see in this case, another kind of live room insider, right? We're talking about structure-based targets for bats. If you're going to take a structure-based target at the B leg instead of the 382, again, before any type of rolling, the initial risk reward is going to be about the same, a little bit less, but I would always bank in the fact that we're going to roll targets a little bit, just because very rarely does price action hit our entry right on the nose and then reverse without kind of probing up a little bit for the suckers, or the new and uninformed traders, I should say. Suckers sounds mean. All right, next one. Over to the dollar index, and the dollar index has an awesome opportunity. This is going to be a classic pullback trade, my favorite trade. It's probably the simplest thing to do and teach, but again, because people don't understand the basics, they're not very good at it. But what we have here in the dollar index is a violation of structure. These are my notes from a trading view. No, I didn't want to do that. Undo. This is the notes for a trading view video I did the other day, but we can basically do this, right? Again, structure identification is key here. Master the basics, right? We look at our previous levels of structure. We had a previous level of structure right here and a higher point right about here. And ask yourself the question, what do I identify, right? What did price just do, right? Price just broke and closed above. All right, so we identify a higher high, higher close. We can predict that price is likely to continue higher. Now, if price is likely to continue higher, where are we likely to continue higher to? Let's just do more kind of structure analysis. Let's draw out the ebbs and flows. We came here, right? So these are going to be two important swings in the market. The lower conservative swing is about right here. The higher swing, the outside return, is about right here. So right now we have two levels that we can look at for as far as predicting where price is likely to go next. Now, I'm always on the conservative side, for the most part, 90% of the time on the conservative side. So I have no interest in trying to fight through big old clusters of structure to get my targets. I want to get my targets off at the first sign of danger. That's the counter trend nature in me. It really kind of varies depending on what type of trader you are. But this first yellow line or this first red line that will turn to purple. Nope, wrong one. Sorry, got shot too many times today, so brain's still a little rattled. This first purple line is going to be a level that I'm shooting for targets. So what we're looking for here is a classic pullback trade where price action retraces back into our previous level of resistance, which should now act as support, right? This would be the initial zone you could look for, but we can go all the way down. Well, I'll draw different levels. This would be the first zone that I would look for right in here, just because that's that little structure cluster looking left. Another zone that I would pay attention to, just from like the supply and demand aspect of things, is going to be right here, right? And then technically this trade is valid until you violate these levels. So if you're familiar with like the Jason Greystone trend continuation strategy, this is a kind of the same type of deal where, hey, you have a first strike, a second strike, and a third strike, or maybe better said, we have a first area, a second area, and a third area. This first area is going to be your most aggressive area. It's going to give you the best opportunity to get into the trade because it's a shallow pullback. If this is going to be a strong continuation pattern, then we would expect a shallow pullback. The medium level is going to be the most important level of structure, in my opinion. This should give a really significant fight here. And this third level is okay as well. This is going to give you the best risk reward in the situation. So 3 levels you can choose for. Obviously, you can have entry reasons for all 3, where, you know, first strike you do this, second strike you do that, third strike you do that. Or another way is just waiting for your reason for entry. If you need something specific for your entry, and let's say it doesn't happen at this first area, well, then you got to wait for the second area. If it doesn't happen here at the second area, then you got to wait for the third area. And either you get it or you stay out of it and wait for the next opportunity. But 3 areas here on the dollar index, which I think are key to look for a pullback trade and an extension up to about 95.70.